4.12%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much. Well, today's Bloomberg Big Take and one of the most read stories on the Bloomberg terminal about China's $6 trillion stock market rout, which our team writes, quote, reveals a painful truth for President Xi Jinping's government. People are hopelessly gloomy about the outlook for the world's second largest economy, and their pessimism is becoming increasingly hard to ignore.
Yeah, talk about a wipeout when you look at the Chinese stock market. Well, Gerard DePippo is Senior Economic Analyst for Bloomberg Economics. He joins us on Zoom from our Washington, D.C. bureau. Gerard, I'm so glad you did this story because we have been watching. I'm obsessed with watching what's going on with China because it's such an important aspect of the global economy, second largest economy. Having said that, you know, we continue to see investors not so comfortable with taking bets on the Chinese market. Tell us about what you guys wanted to tackle in this Bloomberg Big Take.
I mean, the bottom line is that, as we say, the Chinese stock market, which is counting both the onshore and Hong Kong markets, has lost something like $6 trillion in market cap over the past year. What it reflects is primarily a loss in confidence that is driven by essentially the bad macro environment in the Chinese economy. In China, the stock market is not as important as it might be in the United States, but it is certainly reflective of the low confidence. And a lot of that is really just showing the weak macro factors, lack of economic growth comparatively by China standards, mind you, and especially things like the property sector deflation, which continues, and even the risk of general deflation, which the central bank was recently talking about. So the bottom line is, you know, for Xi Jinping, there is a confidence problem, and our view at Bloomberg Economics is that the Chinese government has to do more if they want to correct that.
Well, and what's interesting is when you say confidence problem, there's a real major global investor confidence problem, right? Because when you talk about the stock market over in China comprehensively, I mean, what's more important to people who live there in China, to Chinese people, it's their real estate investments, right? There's more exposure versus the equity side of things. But if you think about global investors, that's where the equity markets, they tell you a lot about global investor confidence or lack thereof.
That's right. So for foreign investment, if you look at Chinese central bank statistics, it's something like maybe 5% of the Chinese onshore market is held by foreigners, which is, so, you know, not that big. Primarily, the movements are going to be driven by domestic and especially retail investors. But you're right that there has been a souring of international investors' view of the Chinese market. And a lot of hedge funds got burnt last year as a result of this. Bloomberg put out a separate piece on this recently as well. And so basically, I think the foreign investment view is probably economically more important on the direct investment side. So FDI in China on a net basis is now negative for the first time in a very, very long time, and that is also troubling. But it reflects the same problem essentially that's driving the stock market declines, but it's, you know, different causality.
In terms, Gerard, of problems and challenges that China faces, where does the rout in the stock market actually fall? Because they've got a years-long property crisis, they've got serious demographic challenges, they've got companies trying to understand to what extent they actually want to operate in the country. So contextualize the stock market rout for us.
I would think of the stock market decline and the government's recent response that they might essentially intervene as they've done before as a acute short-term problem, but you're right that, you know, it's not itself a structural problem. It reflects structural issues like debt, like deflation, like demographics. And so I think the government is concerned about sort of juicing the stock market to at least stabilize it, but it's symptomatic of a larger economic sickness, if you want to use that analogy. But the government did announce, uncharacteristically, that the prime minister or the premier announced they're essentially going to intervene. Bloomberg sources claim that they might use up to 2 trillion RMB, so that's about $280 billion equivalent to essentially bail out the stock market. That's something that they call the national team. The national team is essentially state-owned investment funds that on occasion, not generally, but on occasion will intervene on the government's behalf. We saw this quite a bit actually in 2015 when they had a massive boom and bust in the stock market that was actually far more dramatic than what's happening now. But what's happened over the past year is more of like a slow burn that just doesn't seem to stop. It just keeps going down. And yeah, Yes, it rallied a little bit this week, but the trend line is pretty uniformly downward.
Gerard, it's kind of tricky, right? Because, I mean, I think about also, the rising trade tensions that are going on. And I think, we talk about it, Tim and I do, I feel like almost every day, or we have a leader in that it's kind of hard to figure out where China maybe is going, right? They might set out a policy and then backtrack. I think about their, kind of view on big Chinese tech companies and, getting involved and maybe pulling back and realizing we need to support them. It's become very unpredictable to kind of figure out, all right, what is the long-term momentum? Is that fair?
Our China team in Bloomberg Economics would say that the key issue is the government has not fully and convincingly signaled that growth is a priority in the same way it might have been, say, 5 or 10 years ago. So yes, there have been aggressive actions in the past, but investors and Chinese households probably keep waiting for something big, but there hasn't been any big bang. I mean, the analogy we use is there are many pistols, but no bazooka, right? Mm-hmm. So they've done things like announcing a cut to the required reserve ratio, which will add liquidity for banks. We expect 2 more smaller cuts later this year, but that essentially is kind of stopping the bleeding, but it doesn't really solve the overall problem. And I think fundamentally, if you had to pick one factor, it's that they have to stabilize the property market. But our view is that the Chinese property market was overbuilt and supply had outstripped demand. A lot of that was for speculation. The government took some steps to crack down on that, but then it's a very painful process. And in essence, they're about 2/3 of the way through this multi-year process, and we still expect that to continue this year.
Well, and they created that problem, right, 10 years ago by injecting a lot of stimulus into their economy, and what their economy's main driver was real estate. And so you had people going out speculating. I remember Jim Chanos years ago, and others talking about the ghost cities that were built. I mean, there was a lot of money they pumped in to stimulate, and kind of, so here we are. And maybe it's tricky to kind of fix that, right?
So part of it is because of stimulus, but I think the bigger issue is that Chinese households have very high savings rates, and they have nowhere else to park the money. So in the U.S., you would put it in the stock market. In China, they generally don't do that as much, and particularly after 2015 or 2023, they're going to be less inclined to do so. So what else can you actually buy in China that consistently keeps pace with just nominal growth? And historically, the only answer to that was property. Just that has not been the case for the past 2 years or so.
Gerard, I know we're not talking politics here, but politics and the economy, as you've talked about, are so intertwined in China. Does the party face any threat given the weakness that we've seen in China over the last few years?
Threat might be a bit of a strong word. I think it's more, there's generally discontent, and even in official statistics, consumer confidence is quite low by their own data. I think it's more, how do you re-energize the economy, and particularly the urban middle class. It's sort of the economic base of the country. Those are the families that have their wealth tied up in the properties that are deflating, right? I think that there is a political problem there, but it's not severe in the sense that if the government doesn't address it, it's going to have a catastrophic effect. I think the biggest problem is just economic, right? So part of what Xi Jinping is saying is that he's prioritized national security, things like self-reliance. They've not abandoned growth as a target. We expect them to announce something like 4.5 to 5% as a growth target for this year, which they'll announce in March. But it's not the same growth-oriented or sort of growth at all cost mentality that you would have seen a decade ago.
I would also say that's also, and you guys put this in this story, Gerard, is that one of the things that are concerned, once again, this is not a new story, but being worried about whether or not you can trust the Chinese data that's put out, right? And they don't want to put out anything, as you guys report. Beijing has ramped up restrictions on sensitive and unflattering information about the nation's faltering economy, so that even when they put something out, if it's positive, you're like, can I trust it?
Yeah, there's a tradition of kind of the penny wise, pound foolish approach, right? So this has happened before. It happens during downturns. They essentially censor what their own Chinese banks are saying. I don't think it's helpful. I don't think anyone objectively could, but they do that because they think it tamps down a negative sentiment. But you're right; it just sort of adds to conspiracy theories, even if those are not justified. I mean, even in the official data, right? There's enough indications, like with the property sector, that things are not looking great. Although the private sector data suggests things are maybe even worse in terms of price declines.
What do we need to understand, Gerard, about credit in the system in China?
China's financial sector, unlike, say, the U.S. is very much a capital markets-based system, right? So you can issue bonds. In China, it is still like 80% bank loans or pseudo-bank loans. And credit, it's a very credit-intensive economy. The government has tried to reduce the reliance on credit, so that was causing debt problems, particularly with state-owned enterprises and with local governments. I think, normally, like, what they would have done after the global financial crisis is essentially open the credit taps. They don't want to do that because it just adds to the problems that they're trying to solve. So I think the fundamental problem is they haven't figured out how do you sustain fairly fast growth rates given the size of their economy without adding to the debt load. And what we've seen is like a lot of localities that themselves rely on revenues from land sales, which are of course affected by the property sector, are the ones struggling to keep going without issuing debt. But the debt they're issuing is the stuff the government doesn't want them to do. So there's sort of like this, it's kind of like if you have a balloon and you squeeze one part of it, the air moves the other part. You can address one problem, but it doesn't fix the whole thing, but it still keeps chugging along.
Hey, one economist quoted in this piece, Alicia Garcia Herrero, she's over at Natixis SA, says they need to come up with a big stimulus. I don't know whether they have the fiscal space or even if they can cut rates enough to make it happen. So, I mean, is that what we should be as investors kind of keeping on our radar? I mean, I feel like there's drips and drabs that kind of seem to come out daily or certainly weekly, but is that what the growing consensus is, that if China really wants to change its investment trajectory, which plays out in its equity markets, that's what they need to do. They got to come in with the big guns. And can they do it?
Yeah, so there's this debate of is that just going to make the problem worse, or do you need a sort of a jolt? It's kind of like if you're in cardiac arrest, although that's obviously an extreme example. Yeah. You have to jolt it to get back, right? Yes, we are waiting for more indications of stimulus. We don't believe there's going to be a single giant, big bang, but they have suggested in Bloomberg reporting that they might, have a trillion RMB in special bonds that the central government would issue. But one of the big problems, I think this is what Alicia is referencing here, is a lot of localities, and localities are by and large in charge of fiscal policy, or at least spending in China. A lot of those localities don't have the balance sheet because of the property sector issues and just general fiscal imbalances. And so at the end of the day, it's sort of like the central government and the localities are playing hot potato with the problem, and no one wants to hold the bag.
Gerard, what does our audience need to watch next to sort of understand the direction, and if the direction actually shifts here beyond what happens in the equity market in China?
I mean, the big thing is that the two sessions of the National People's Congress in March, they will announce their growth target. So if they say 5% or above, I would treat that as a signal that the government intends to do more in terms of stimulus. If they say, as we think, something like 4.5 to 5, that's sort of kind of within range of what the consensus is, that might not signal as much. So in China, the growth targets are as much a policy indicator as they are an economic indicator. So that at the macro level is the really big thing. But even before that in March, you might see some other smaller actions. And of course, to see if the so-called national team actually does intervene, although you don't always tell automatically, but maybe that will help stabilize things or at least put a floor on it.
Hey, I do wonder, an interesting story that we talked with our Doug Krisner about earlier in the week about what Jack Ma was doing, and he was buying Alibaba stock to show support for his struggling empire. The stock was up the most in 6 months. We know it's been having a rough go, but the role of individual, heads of companies, I don't know, is that something that can provide some momentum over in China? Certainly for the equity play, yeah.
And there are essentially three responses, right? So there's a direct market response like the national team, there's a macroeconomic response, and then there's messaging. What he is doing is contributing to the messaging campaign. Does it help? Yeah, a little bit. But at the macro level, can you expect founders to bail out the stock market? No.
Yeah, and yeah.
I mean, Jack Ma's he's like a not the typical example.
No, he's not the typical example.
He's not as flamboyant and open as he used to be because they sort of cracked down on that. But
yeah.
I think it's certainly a positive signal and he's probably getting gently nudged, like, hey, support the national team effort in your own way.
Yeah. Remember, he did disappear for a long time. Was it back in 2020 when Beijing was clamping down? Yeah, it's interesting. Hey, listen, great story, really smart. We've been watching the Chinese market and kind of the struggles, and certainly the investor and foreign direct investment pulling back in a big way. So great to check up with you. Gerard DePippo, he's Senior Economic Analyst for Bloomberg Economics. It's the Bloomberg Big Take. It's on the terminal. Highly recommend you check it out.
Yeah, check it out. Bloomberg.com/Big Take. Also just Big Take on the terminal. The Dow up 0.2%, as is the S&P 500. The Nasdaq, Carol, in the red.
Nasdaq Golden Dragon down about 0.2% in today's trade. Was up higher earlier, but now just slightly lower. This is Bloomberg.
Headquarters, I'm Charlie Pellet, just getting word that home improvement chain Lowe's is eliminating some corporate positions, adding to the ranks of American companies announcing layoffs in recent days. Shares of Lowe's, the home improvement retailer, up now by about 0.4%. Lowe's, by the way, joins other big American employers, including eBay, which is cutting about 9% of its full-time employees, and beer-making giant Anheuser-Busch InBev in announcing workforce reductions. Stocks are higher. 38 minutes to go until that closing bell clangs on Wall Street. Right now, we've got the S&P up 12, gain there of 0.3%. NASDAQ, though, swinging between gains and losses. Right now, we've got the NASDAQ Composite Index up 1 point, little change there. The Dow up 113 points, up now by about 0.3%. Traders are pushing stocks toward another record on the S&P on speculation the Fed will be able to engineer a soft landing as the economy remains fairly resilient and inflation shows signs of cooling. 10-year at 4.13%, with a 2-year that's yielding 4.31%. As for the overall market backdrop, Kaylee Cox is investment analyst at eToro USA.
Valuation on the S&P 500 itself is quite steep. It's quite steep because of the big tech shares, because of tech in general. Again, this isn't a bull market that every stock has participated in. In fact, 72% of S&P 500 stocks underperformed the index last year. That's a historical underperformance when you look back to 1990 or so.
And you can hear more of that conversation on the Surveillance Podcast. Download it wherever you get your podcasts. Spot gold up $4 the ounce to 2017 for gold. That is a gain of 0.2%. West Texas Intermediate crude up 2.9%, $77.29 a barrel on WTI. Alphabet, Amazon, and Microsoft must provide information to the Federal Trade Commission on their investments and partnerships with AI startups Anthropic and OpenAI, all a part of an agency study that was announced today. Recapping, stocks are trading mixed, but the S&P up 12 points right now, higher by 0.3%, 10-year 4.13%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. So last week I get an email from my insurance company about renewing my auto insurance. You get this every 6 months. Why can't I buy a year of insurance, by the way? This happens every 6 months.
You can't buy a year of insurance?
No, they make me do it every 6 months. This email was different, though. $1,984.65 for 6 months of auto insurance.
Yeah.
Okay. $330 a month, up from $1,750 just 6 months ago. That's a 13% increase in just 6 months. Okay?
That's crazy.
I emailed my insurance agent, asked him what I could do, change my coverage, raise my deductibles, anything to get the price down. A few minutes later, he emails me back and he says, yeah, it's ugly out there.
I think you need a new insurance agent.
He's a broker, though. Like, he has the view of everywhere in the market.
I'm just telling you, I could buy a policy for a year, no problem.
No, there are companies now in New York that don't even write insurance in New York anymore.
Time to move to New Jersey,
It's a
kiddo.
mess out there. All right, so the cost of auto insurance in the U.S. rose more than 20% in 2023. It's the biggest annual jump since 1976.
Nuts.
That's according to data from the U.S. Bureau of Labor Statistics. Rates are up 37%, Carol, since January of 2020.
All right, well, in the forthcoming issue of Bloomberg Business Week, which is out on newsstands tomorrow, already online at Bloomberg.com/businessweek, also on the Bloomberg. Bloomberg News auto reporter Keith Naughton gets at the reasons why insurance has gone up so much in such a short time. He joins us on Zoom from Detroit. So glad you are back with us to talk about this story. What the heck is going on, and how can we help him? No, but what's
You can't help me.
What's going on?
Well, there isn't much hope for any of us on the auto insurance front. To complement Tim's story, I was talking to another editor at Bloomberg today who lives in New York, and he said the insurance premium quotes he was getting on his new car were $500 a month. So it's like having 2 car payments on the same car.
Oh my God! Why?
Yeah. So the why here is that cars are just loaded with more technology now to help you avoid accidents, and those technological bits, it's cameras and sensors and sonar from bumper to bumper on the car, really drives up repair costs. And then those repair costs are being passed on through your auto insurance rates, which are skyrocketing.
Okay, but Keith,
and if you have...
Keith, sorry to interrupt. I just want to make sure I get this point. If our cars are filled with this technology that helps us avoid accidents, shouldn't we be getting in fewer accidents, and therefore there should be fewer repairs, and insurance companies wouldn't have to pay out as much?
Man, my car basically drives itself. It's so much safer than rather me driving it, to be quite honest.
Yes, that's way too logical. That's exactly what should be happening, but is not happening. And in fact, what's been happening since 2020 is auto insurance claims are going up, not down, despite all this whiz-bang crash avoidance technology that today's cars are laden with. The reason behind that has something to do with distracted driving. We all have our phones in the car, or if you're not looking at your phone, which is illegal in New York and many other states, while you're driving, then you have this big touch screen in the middle of your dashboard that you're glancing over at or touching or, focused on instead of the road. So accidents are up, fatalities are up. It's the safety technology it might be helping us survive crashes, but it's not reducing crashes.
I'm just going to tell you guys, I even get a dividend check at the end of the year from my insurance company, which I've been with for almost 30 years, since I was a teenage driver on my dad's policy, and I kept it. And then when they have a good year, we get a dividend check. So I'm going to have to talk to you. Oh, it's just kind of, I'm sorry. I'm just
You should check to see how much you're paying, though, because I bet it's a lot.
No, I do look, but I will check again. It's kind of wild, and what I'm worried about is, wait a minute. I'm going to go on my soapbox for a little bit more here, Keith, because I do feel like I wish like traffic cops actually police driving too, because I do feel like driving has gotten more aggressive. People fly through stop signs. Like I just feel like there's some stuff going on that it's kind of the wild, wild west on the road. But I don't know that relates to your story, but I just feel like people are a little crazy on the roads today, and maybe that's why when an accident they get in an accident and they're also distracted, there's a lot going on, and so then it's just going to cost more. I don't know.
100%, Carol, and that's why auto insurance companies now, some of them offer you the option of attaching a device to your car so they can monitor your driving. If you prove to be a good driver, like I'm sure you would, Carol, then you actually get a reduction in rates. But that raises sort of privacy concerns. Lots of folks don't want their insurance company knowing everywhere they're going at all hours. So people decline that. But that is one way to try and reduce your rates. But rates are climbing. I did the same thing Tim did last year. I looked at what I was paying, and I couldn't believe it. And so I started shopping around and found a cheaper rate. But it's getting harder and harder to find a lower rate because all of them are going up, and the insurance companies are not only doing it because they have higher repair and crash costs, but also because they are now making a lot more money doing that.
I'm glad you bring up the more money part because it turns out that insurance companies are doing pretty well right now. So Travelers closed at an all-time high earlier this week. We learned from Progressive earlier this week that profit for the most recent quarter more than doubled from a year earlier.
So maybe they're charging too much. If their profit is going up that much, that means obviously even when we have an accident, it's not costing that much, even whatever they pay out. I don't
know. I mean, what are we?
My logic wrong?
It turns out that we're all paying for. Like, it's pretty good to be an investor in some of these companies, Keith, and perhaps not so good because we're paying so much as customers.
Right, and it's not just that the insurance companies are gouging us. There really are, honest goodness, reasons that it costs more. Let me give you one example from my story, and that is the Toyota Camry. So that was the best-selling car in America for decades. And in 2018, Toyota redesigned it and added a whole bunch of driver assist features, technology, radar, sonar, cameras, throughout the car. But just looking at the front bumper assembly, it went from having 18 parts to 43 parts. And so as a result, you get into a relatively minor fender bender with a Toyota Camry. And I'm not picking on Toyota. This is
across the
true
industry.
of all cars. Yeah. But this particular example given to me by the folks at Mitchell International said what that did is it drove repair costs for the Camry. When you get in a front-end collision, it drove them up by 43%.
That makes sense, yeah.
Keith, one thing that was so shocking to me about your story was the difference with EVs, and you bring up the Hertz issue. We only have about a minute left, but talk to us about how much more complicated EVs are to repair and why that's also driving up rates.
Right, and Hertz is selling off a big chunk of its EV fleet, and one of the reasons they cited is that EVs cost twice as much to repair as regular cars. One of the reasons is that big battery, Tim, that's in every EV. You have to disconnect it, power it down, or in some cases remove it altogether to avoid injury to the technicians, to avoid fire risk, and this just adds time in the repair shop and cost.
Unbelievable. There's also an interesting part of your story where you talk about all this new technology has also added a costly step to the repair process. It has to do with calibration, which is you just understand. You got
to calibrate the sensors. It costs $500 more to do that when you get a
Right?
It's amazing.
It's time consuming.
It's
Keith,
just-
thank you for this story.
yeah.
I sent it to my whole family
So
because
important.
I was complaining to them about insurance recently. So it turns out I sent a lot of Keith stories to my whole family.
I know, there's a straight, right?
Yeah, it's
straight
like
path.
he writes about cool stuff.
He does, and it makes so much sense.
Thanks, guys.
Keith, thank you. Bloomberg News auto reporter Keith Naughton. As we said, this is in the upcoming new issue of Bloomberg Business Week. It's going to be on newsstands tomorrow, but it's already at Bloomberg.com and on the Bloomberg terminal. Actually, I think the newsstand today.
Okay, go check out how much you're paying for insurance.
Now you got
for
me
car
worried.
insurance.
I know. I just saw the bill come in.
It's yeah. Well,
My husband just kind of slides it away. So maybe,
okay, maybe he doesn't want you to see it. Hey, let's go to Washington D.C. now for a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 991 newsroom. Hey, Nance.
Hey, Tim. President Biden is promoting infrastructure improvements that are happening on his watch. He traveled today to Superior, Wisconsin, to announce federal funds to replace the bridge connecting the city with Duluth. Bloomberg's Irv Chapman with more.
The current bridge, built in 1961, the president said, was so corroded weight limits had to be imposed on trucks.
$1 billion from the bipartisan infrastructure law will be used to build this new bridge. A new bridge with a modern design. For decades, people talked about replacing this bridge, but it never got done until today.
The president, as he does everywhere he goes, listed other projects in the works, from high-speed internet to replacing lead water pipes to cleaning up the Great Lakes. In Washington, Irv Chapman, Bloomberg Radio.
It was quick. Former President Trump spent only 5 minutes on the witness stand today in the defamation damages trial brought by writer E. Jean Carroll. He denied ever assaulting Carroll and admitted this was the first trial with Carroll he'd attended. Trump has already been found liable for sexually assaulting Carroll, so this trial is to just determine damages. Trump White House official Peter Navarro has been sentenced to 4 months behind bars. He was convicted of contempt of Congress for refusing to cooperate with the congressional investigation into the January 6th attack on the Capitol. Navarro was asked after hearing his sentence if he expects Donald Trump to pardon him if he is the next president.
No, I'm not expecting or hoping for that. That's not an issue. I do believe President Trump will win the White House.
Navarro had argued he thought he was shielded by executive privilege since then-President Trump told him not to cooperate. The judge admonished Navarro, saying the words executive privilege are not magical incantations. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We got 20 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ back in the green. NASDAQ 100 index does, however, remain in the red. 20 minutes to go, as I mentioned before the close of trading. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading higher with the Dow currently up 167 points. S&P's gain 18. And like you said, NASDAQ just turns positive, now up 7. The U.S. 10 yield at 4.13%. Gold is up 3. Oil is climbing by 2.9%. And Bitcoin is higher by 0.2%. Among the main 11 S&P sectors, leaders were energy and telecom. Only healthcare and consumer discretionary were in the red. And leaders to the upside in the Dow, IBM and Dow Inc., while Boeing fell 6% as the FAA halted 737 MAX production hikes. After earnings, Tesla fell 12%, Humana dropped 11%, but IBM gained the most since 2001. In other news, Comcast is buying back $15 billion in stock. And wrapping things up, Visa and Intel report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. Definitely a grind on Wall Street. I mean, we're in the green across the board, but just barely on the NASDAQ. Could be another record, though.
Could be. That just has to close in the green.
Exactly.
Funny how that works.
And right, exactly. And likely for the S&P 500.
Right, but we're in the red.
Okay. Yeah.
Okay.
What do you mean? For the year?
No. Just for today.
We're
for
in
the
the
NASDAQ
red?
100.
Well, we're not. We're up 3 points.
Oh, I'm looking at the NASDAQ 100.
Oh, NASDAQ 100.
Yeah.
Oh, sorry.
Okay.
All right. You're right about that. And the Dow really the outperformer. We heard Charlie just bringing down the numbers. Just an interesting trade here. We're off our lows. So let's get to it with Greg Halter, see what he has to say. Director of Research at Carnegie Investment Council. They've got about $4 billion in assets under management. He's with us on Zoom from Cleveland, Ohio. Hey, Greg, nice to have you here with us. I am curious, among the investors that you deal with, institutional or otherwise, what's top of mind when they pick up the phone and give you a call or shoot you a message?
Again, thanks for having me on the program again. I would say top of mind is the disbelief that the market did as well as it did in 2023 when they're looking at their statements and their returns. And of course, wondering what that leads us into for 2024.
Well, past performance is no guarantee of future results.
I've heard that.
Heard that somewhere before. Where does it lead us in 2024, Greg?
Well, we have an election year. We have the potential for the Fed to cut rates. Our belief is in long-term investing, and our general long-term belief is the market goes up, not every year, but goes up over time, 8 to 10%. We do think 2024 is going to be a decent year for the market, certainly not as strong as 2023, but we think it'll be up.
All right, so if you think it's going to be up, though, what do you think is going to get it there, and where do you think that investors should commit money to?
Sure. I think the larger names, excluding Tesla today, will continue to do well. I mean, this is not like 2000. You have companies like Microsoft at $3 trillion market cap, Apple, Meta, Google, Amazon. These are large companies that are just producing huge amounts of free cash flow, allows them to do so much with that. And besides that, we think the market will broaden out where some of these smaller names, and small might be 100 billion, but some of these smaller names will participate more in 2024 than they did last year.
Okay, well, let's talk about some of those smaller names that you've got your eye on. I mean, well, not actually that small. Stryker's a pretty huge company, medical device maker. It's on our radar because one of the, I don't want to say heir, but I guess we would say heir of the Stryker fortune just made a huge gift to Spelman College. So far, it's up 3% year to date. You're bullish on the company moving forward. Why?
We are definitely bullish long term. They have a medical business, and then of course the orthopedic implants, shoulders, knees, hips. I can speak from experience. It's 2 months ago today. I had my hip replaced.
Oh, wow.
And it's been actually quite amazing. The pain is gone.
Wow.
Obviously, there's a recovery, and I've done all the work that you need to do, but it's quite incredible what can happen when you get these implants and the change in your life and lifestyle, where I couldn't walk half a mile. Now I'm walking 3 miles, cycling 30 miles. It's a huge difference. And we're talking only 2 months so far. So we think Stryker will continue to do well. People are looking for those types of implants. I can't tell you how many people, when I did my research, said, why did I wait so long? And Stryker has a top of the line robotic system called the Mako, which they bought 10 years ago for, I think, $1 billion. People laughed at them. They're not laughing now. I think it's still early innings for that, and certainly for that internationally.
Hey, Greg, just real quick. First of all, it's great to hear that you're doing so well after such an invasive surgery. So congratulations. And yeah, we're sending you our best wishes. Before you went and did that, did you know you wanted to use a Stryker product? Like, take me through the decision-making process as a patient here, if you don't mind me asking, because I don't know if it's really up to patients, right? It's the provider who chooses this stuff now.
Correct. And in fact, I did not have a Stryker. I'm just speaking generally.
Oh, interesting.
Stryker has orthopedic implants. Mine's a J&J, which is DePuy. And you're right, it is up to the surgeon. So I could not go in and say, oh, Mr. Mrs. Surgeon, please use Stryker. You know, they're going to use what they're comfortable with. So obviously there's maybe different variations, but I think a hip implant is kind of a hip implant at this point.
Yeah, no, it's interesting. You get a little bit of a dividend play too. I was just kind of looking at it. It was up about 22% last year. But yeah, it really plays into, we're all getting older, and someday you and I, Tim, will need one as well.
I know.
No, but it makes sense, right? And I hear that from a lot of people who finally get surgery and like a hip replacement, and they're like, oh my God, game changer. Like, I can kind of go back to living my life. We want to go to the other side of things, because I think AI is something in general and technology that's on your radar. How are you, what's the smart thinking in your view about that, and the investable thought around that?
Yes, it's a great question. Certainly lots of interest given what happened last year and is continuing. And so far this year, at least on the semiconductor side with AI chips, I'm calling this the chip ripper market so far. I mean, you've got NVIDIA up another, 25% this year?
Yeah.
AMD, Broadcom. I mean, there's so many of these chip names that are doing well. So we think it's going to be those types of companies, as well as, again, the Microsofts of the world that have this AI technology. Google, again, these are not small companies. They're spending, I can't remember what the number was that I looked at. Maybe it was on Google or Amazon, $75 billion in R&D in a year. Wow. That's incredible. That's more than the GDP of some countries.
You're probably not going to be surprised, but the second best performing stock in the S&P 500 was the #1 top performing name in the S&P 500 last year. We're talking about NVIDIA. It's already up about 24% so far this year. And I know it's something we're going to watch Intel to see whether or not they are making any kind of gains on NVIDIA. Everybody's gunning for NVIDIA.
So, Greg, 30 seconds left. Do you see any frothiness when it comes to this AI?
Definitely. I mean, again, you look at some of these stock charts and they're just spiking, in a flag pattern, if you will. That gets us a little nervous when you get so far away from the 200-day moving average. So there may be some weakness or softening there or pullback, but over the long term, it certainly seems to be a place to be.
Not sure if we can jam this in, but we did have a story today. Alphabet, Amazon, Microsoft, they have to provide information to the U.S. FTC on their investments and partnerships with AI startups like OpenAI and some others. 20 seconds, is that anything to be concerned about? Any thought on that real quickly?
Sure. This has been going on for a decade, probably, at least, with Microsoft and all these others relative to the regulatory side and whether or not they're too large. It's going to continue. Whether or not they break these companies up, who knows?
Yeah, there are definitely different approaches from the FTC on that. Hey, Greg, really great to catch up with you, and we hope your recovery continues to go well. Greg Halter, he's Director of Research at Carnegie Investment Council, joining us on Zoom from Cleveland, Ohio. You're listening and watching Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of both Visa and Intel. Now, Intel reports after the close of trading, fourth quarter earnings will show whether it is winning back market share in server chips and stoking demand for PCs with new AI PCs. A key question for analysts is going to be whether Intel will have the confidence to provide a full year forecast for 2024 ahead of earnings. Intel now up by 1.2%. Tesla cannot ignore that stock today, plunging now by 12.1%. Tesla down after Elon Musk's pitch to investors to look past slower sales growth fell flat. Other EV makers, including Lucid and Rivian, are also lower. Now, Dan Ives is an analyst with Wedbush Securities. According to Bloomberg data, he has got an outperform rating on Tesla shares, along with a $315 price target. And yes, he was listening closely to last night's conference call.
I would call this just a train wreck conference call, even for Musk. The problem here is that it's actually not even so much the demand issue. It's about the price wars and not giving guidance, not giving strategic goalposts. Look, the dream, AI, we're huge believers. Disruptive tech, where this is all going. But in the near term, when the plane's crashing, people are not focused on salted or unsalted pretzels. And that's the problem here that's happening on that call because of the price wars in China.
And he was interviewed this morning on Bloomberg Intelligence, and you can hear more on the Intelligence podcast. Download it wherever you get your podcast. Again, shares of Tesla down 12.1%. Lucid trading lower by 5.7%. Rivian Automotive down now by 2.1%. Again, Intel after the close of trading. I'm Charlie Pellet. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left to go in the trading session, getting ready to wrap up the Thursday trade. We're going to head over to our TV team in just a moment so we can together break down the close for you and some earnings. In the meantime, we want to talk a little bit about Apple.
Yeah, it was interesting. Apple came out with this announcement today, and immediately shares moved lower. Kind of changed the tone of the day, actually, because it's such a big company. Apple embarking on a historic overhaul of its iOS, Safari, and App Store offerings in the European Union, aiming to placate regulators set to impose tough new antitrust rules.
Right, and what's interesting, we still see Apple just down about 1/3 so a little bit lower. The revamp, though, will allow customers to download software from outside the App Store for the first time, according to the company. They'll also be able to use alternative payment systems and more easily choose a new default web browser addressing too frequent complaints of developers and lawmakers. The EU leads the way when it's like getting tech in to like follow the rules and pulling them in, reining them in a little bit.
Well, to that end, Carol, this is a direct response to the EU's new Digital Markets Act. It imposes rigid restrictions on the largest tech firms and boosts the EU Commission's powers as the region's antitrust enforcer. Still, Apple is mounting a legal challenge against the regulators through the EU courts. We'll see if they're successful.
But man, talk about like the two of them coming to order. And listen, at some point, Apple's like, we just got to figure this out, I'm sure.
This is huge, though, because the whole idea of the Apple App Store was that it was this kind of walled garden that was safe, that it was secure, that a user experience was controlled.
Right.
But it also was really good for investors because it boosted revenue and it kept everything inside Apple's ecosystem and universe.
They love kind of walling it off, right?
Yeah.
And it's all in on Apple. Hey, one other thing we want to mention, it came really late last night. Apple's iPhone was the top-selling smartphone series in China for the first time last year. It's a surprise, and it was a surprisingly strong showing in the face of fierce local competition and expanding government prohibitions against the American company's technology.
Wait a second. I thought that,
wait a minute.
I thought that Apple was struggling in China.
Yeah,
I thought that was the whole narrative of the first few weeks of the year.
This is what IDC
We're
says.
concerned about sales in China.
Apple ranking first in shipments in the fourth quarter and 2023 overall.
Okay.
Yeah. See, this is why you got to dig deeper. This is what we do at Bloomberg. Context and digging deeper.
Okay.
All right, we're going to dig deep into the markets, folks. We've just got a few minutes left in the trade. We're going to head over to our TV colleagues. Right now, you've got stocks off their lows. The Dow, really the outperformer in today's session, up 0.6%. Over to our TV colleagues. That's because Beyond the Bell starts right now.
higher by more than 200 points here on the day. That's going to be good enough here for a gain of about 0.6%. The S&P higher by about 26 points, back around that 48.90 level, a gain of 0.5%, while the NASDAQ is higher by 0.2%. The Russell 2000 also getting in on the action. In fact, that's your relative leader here on the day, up 0.7%.
All right, and just digging a little bit deeper into the S&P 500, guys, most names in the index, more than 400 to the upside, Scarlett, just about 100 to the downside, one unchanged.
All right, let's take a look at the sector performances. Out of 11 groups, 2 were in the red: consumer discretionary, which of course includes automakers like Tesla, and the healthcare index, which really includes those health insurers. Everything else is in the green, led by energy, as oil prices top $77 a barrel.
All right, I'm going to go to the individual gainers, if I may. And I talked about airlines earlier. That is definitely on the list. But I'm going to start with IBM because, lo and behold, among some of the top gainers.
You know, Alex thinks IBM is boring.
Old school. Old school.
Watson, you know what? Watson wants to have a word with you, Alex. Okay?
Alex, I don't disagree with you, but do you know what? IBM is the 5th gainer in the S&P 500 this year. It's up about 16%. And it's an outperformer today, but I think we're going to go to another one that's a really big tech name that we've got to watch. Intel out with earnings.
Intel earnings out, crossing the wire right now. Fourth quarter revenue coming in at $15.4 billion. That's a modest beat here. The street on average was looking for about $15.2 billion here. Not really seeing a bottom line number that jumps out at me, so I'm going to get right to the forecast here. So we're talking about the fiscal first quarter here. The company's saying that it actually sees adjusted revenue in the quarter of $12.2 to $13.2 billion. That's an incredibly wide range, and it's well below the average of street estimates. The street on average was looking for $14.3 billion. Once again, the company guiding to $12.2 to $13.2 billion. So the top end of that range is $1 billion less than what the street was looking for. And Alex, here's your bottom line number forecast, I should say, for adjusted EPS in the quarter. The company's saying that in the first quarter, it expects adjusted EPS of 13 cents a share. The street was looking for 34 cents a share.
Yeah, we also got some gross margins too, coming in about 44.5 versus 45.5, which is the expectation, right? We talked a lot about how they're spending on their at their foundries and having to put more money in, and they're not going to be able to get that margin out, and we're really seeing this. But they gave guidance. Weren't we worried they weren't going to give guidance?
Well, you want them to give good guidance.
Well, yeah, but like we were also worried they wouldn't say anything because they didn't have any visibility.
Well, they gave first quarter guidance, but not full year guidance, so that's pretty notable too.
Okay, so a little more visibility into 2024, and we'll get more on the call, but Pat Gelsinger in the press release saying, in 2024, we remain relentlessly focused on achieving process and product leadership, continuing to build on our external foundry business and at-scale global manufacturing, and executing our mission to bring AI everywhere as we drive long-term value for stakeholders.
And some other commentary on the outlook as well. It expects to unlock further efficiencies in 2024, so in other words, more cost cuts, and on track to meet goal of 5 nodes in 4 years. Is that AI speak? What's nodes?
Well, this is the big project that they've been working on, a project that at least investors would have liked to have seen probably rolled out, I don't know, maybe like 3 or 4 years ago. But of course, this is the big bet that Gelsinger is making here. If he can get that done, that's good. But then the other question is the uptake here. When are you actually going to see the customers gravitate to that? And remember, when they started this was before the AI hype, guys. So there's a lot of attention now on an AMD, on an NVIDIA, as being sort of the salvation here for anyone sort of looking into that space here. Are they going to look to Intel as someone that they actually want to do business with?
Right. NVIDIA is the one to match. That's the one that everybody is gunning for. Anybody in the chip sector, that's what they're doing for. And that's what was certainly one of the focuses here. What's interesting is you're now looking at Intel's shares in the aftermarket down just shy of 7%. They were down 10-12% as these numbers hit, with some concerns, obviously, about that first quarter outlook. Having said that, again, Intel on track, as you guys were saying, to meet goal of 5 nodes in 4 years. Do you buy into the Intel story longer term that they are doing this transformation? It's going to take some time. Do you buy into it? Because the stock is definitely off its lows. I mean, that's the bet here.
Guys, I have some other breaking news here. Some management shifts happening over at JP Morgan. So Jennifer Pepczak is the co-chief executive officer of Consumer Community Banking. She will now become co-head of the investment bank along with Troy Rohrbaugh. I hope I'm saying that right. I'm probably not saying that right. So Troy Rohrbaugh and Jennifer Pepczak will become the co-CEOs of the investment bank over at JP Morgan. This feels like a big shift for JP Morgan, just in terms of their leadership, especially from their consumer and community banking as well.
It feels like, I mean, any kind of management announcement at JP Morgan leads to the next question of, is Jamie Dimon setting people up for his successors? Is this part of the succession plan? It may well be. We've seen plenty of people elevated and then kind of sit there and then end up leaving the firm.
What does he say? 5 more years over and over again. 5 more years.
Yep.
Yeah. I mean, and look, he's been there for such a long time. He's the only big bank CEO who was there through the financial crisis. So there are questions about that. But look, investors are pretty happy with his performance thus far.
Yeah. It's just interesting to see these changes. Sorry, I'm a little obsessed with Intel right now, but there are changes that we are seeing. I mean, these are big news, in terms of some of the people changing on Wall Street. I feel like a lot of it happens at the beginning of a new year. But one headline I just want to mention in terms of Intel, they're talking about this 5th generation Intel Xeon to ship with the OEMs, the original equipment manufacturers, early next month. This is part of their AI play, and so this is what investors want to know about. Maybe this is why the stock is coming up off of its lows.
And that's what people are going to focus on when the company releases its earnings call as well. I just want to shift our attention to Capital One, which just reported earnings as well. Fourth quarter adjusted EPS of $2.24. Missing the mark here, analysts were looking for $2.66. Net revenue of $9.5 billion comes in slightly higher than what was anticipated, which was $9.45 billion. And in terms of net interest margin for the fourth quarter, 6.73%, just slightly above the expected 6.71%. And fourth quarter total deposits meets analyst estimates of $348 million. Capital One, a little different, obviously, than Visa and MasterCard in that it is a bank holding company, and so it does take deposits, and there are a lot of questions, of course, about the deposits, especially following last year's regional bank crisis.
Yeah, absolutely. You take a look there at Capital One. Actually, before we move away from Capital One, I see Visa earnings crossing the wire right now. If you want to hit that as well here, it looks like those numbers coming in slightly above estimates. EPS here in their fiscal fourth quarter, $2.41 a share. The street was looking for $2.34, and that's on an adjusted basis. Revenue also a slight beat, $8.6 billion. Street was looking for basically 8.6, 8.57 to be precise.
Okay, we look to Visa for an understanding about how the consumer is doing. Visa processed transactions at $57.5 billion. That's up 9.5% year over year. That came in just shy of estimates. We can 57.77, so kind of meeting estimates. Total Visa processed transactions, though, up 9%. Operating expenses down 5.8% year over year, coming in below estimates, Alex.
But that's the thing, is if you travel, right, and you're going overseas, the revenge travel, that's going to definitely benefit Visa. Another headline crossing here, Levi Strauss, as they announce earnings, they're going to cut up to 15% of their corporate staff. That's after their adjusted earnings misses estimates remain.
Yeah, absolutely here. And this gets back to the thing. I mean, how many job cuts were we talking about today? Of course, over at Microsoft, some of that might have been related to the acquisition with Activision, but we heard from a few other companies. And of course, there were all those layoffs we saw in the digital space. Real quickly, guys, I do want to go back to the tech sector, back to chips. KLA out with this results, a big chip equipment maker here. A big miss there, 466 to 586 is the forecast they're giving for their fiscal adjusted EPS. The street was looking for 583, so the bottom line, the bottom end of that range, well below street estimates.
Yeah, stock down about 5% in the aftermarket. We're continuing to keep a watch, too, on another big player in the semi space, Intel, which is down just shy of 6%, so it's off its lows. All right, a bunch of earnings. For all the details, head to Bloomberg.com if you missed any of the details, but that's a wrap for our cross-platform coverage on this Thursday. Radio, TV, YouTube, and Bloomberg Originals. We call it Beyond the Bell. We'll see you again tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody. As you just heard, Intel earnings are out. The stock is down about 6% in the aftermarket. Some concerns in terms of the outlook. So we want to get to it, break down the quarter even more.
Yeah, we got Dan Morgan with a senior portfolio manager at Synovus Trust, joining us on Zoom from Atlanta. We check in with Dan in the wake of many a company, including Intel. Synovus Trust Company has about $18.8 billion in assets under management. That was as of last month. Dan, you have had about 5 minutes. Well, that's generous. About 3 minutes to look at these.
That's a lot of time for you usually give me.
Yeah, it is more of a time frame than we usually give you. As Carol mentioned, we're seeing shares move lower in the after hours. Before the call, we should note. What is your instant reaction to these numbers?
Well, obviously, Tim and Carol, the guidance going into the first quarter is disappointing. Even if you look at the midpoint of that range that they gave in revenues, that came at $12.7 billion. Street was at $14.2 billion, and then that EPS number was a big miss. When you look at the area I was kind of focusing on, which was client computing, which is their chips that they sell to laptops and PCs, that pretty much came in with expectations, 8.84.
Why are you watching? Sorry, why are you watching? Why are you watching that segment?
Well, Tim, I was really looking for a little bit of a rebound here in regards to PC chips. We know that Intel is behind both AMD and NVIDIA in regards to AI. We can talk about it a little bit later in terms of the chips that they have, but they had a pretty strong quarter last quarter in terms of that client computing group. So I was expecting that momentum to kind of carry over and maybe get a beat. But they came in line, which was fine. But obviously the guidance, Tim and Carol, for the first quarter was very disappointing. We're hoping for a little bit better than that.
Yeah. Yeah.
But especially after a blowout third quarter.
Well, what's interesting too, and I'm looking at our write through by our own semiconductor king, and that is Ian King, and he says, though the chip makers' PC business is recovering, you were talking about this, it has been losing ground in the lucrative market for data center chips. Tim and I were talking earlier about, you know, and even kind of on the residential side or commercial real estate side, I mean, data centers, people continue to build, they continue to need, they use a lot of energy. Does that worry you that they are losing ground in that market specifically?
Well, that's been the conundrum for Intel, is that we know that we've talked about NVIDIA before on the show. There's been a huge adoption of their GPU chips, the A100 and the H100, which are their key, AI chips. We know that, for example, Advanced Micro Devices has their MI300X and MI300A that's both going to be coming out. They're going to be in that same space, which is the most lucrative so far, which has been data center for AI. Now, Intel does have some products coming out. They have their Falcon Shores. They also have their Habana Gandhi, I hope I'm pronouncing that correctly, 3. Those are their key chips that should help them in that space, but they're not coming out till later this year or maybe next year. And that, I think, Carol and Tim, has been really the hurdle for Intel competing in that data center space, is that they just don't have the same offerings right now as AMD and NVIDIA.
How's Pat Gelsinger doing with turning the company around with the transition?
Well, Tim, that's exactly what this is. This is a turnaround. As they move towards becoming a foundry, they actually had some revenues they posted on this quarter from that. Also, in terms of getting back on top, I mean, Intel was the top player over AMD forever, just in terms of performance and everything. And they're kind of climbing a staircase back to get back to where they were before. So he's got a lot of moving parts, right? And it's just, getting AI chips out, getting the foundries up and running, getting that performance and so forth back to what it was to compete against AMD. So just a lot of moving parts for them to execute on. And I think that's kind of coming out here, guys, in this upcoming guidance that we're seeing for the first quarter, where you are kind of seeing some of those doubts come to fruition with the below than estimates in terms of what the street was looking for.
So net, Dan, I mean, do you see signs that the transformation that Pat Gelsinger is doing to kind of restore Intel's might that it had for so long and so many years, do you see signs of those changes kind of paying off?
I think so, Carol. I mean, if you reported on the electronics show in Vegas a couple of weeks ago, we know that Intel came out, introduced 2 new chips, AI PC chips. They're targeting 100 million of those chips to be sold going forward in AI PCs. They're very, feeling really good about that. They had some really good, strong performance coming from those 2. I believe one is called Lunar and one is called Arrow Lake, they always come up with these interesting names now. It used to be Intel and Pentium. Now it's all these different geographical locations. But so they do have things coming up. So I do think they're on the right track. It's just that it's going to take more time.
Like, how much time should investors expect here?
Mm-hmm.
Well, probably the next quarter, Tim. No, I'm just kidding.
I was going to say, I mean, I would have seen the different guidance if that's the case, right?
Yeah. Yeah, the street has no patience. Yeah. I think we have to bear in mind, too, that even though we were looking for encouraging numbers in that client computing group, if you look at the overall framework of what's happening in the semiconductor industry, we've been in an ever-present increase in terms of turnaround since the first quarter of 23, roughly around February of 23. We've had 10 consecutive quarters of consecutive sales growth in that overall industry. So I would expect Intel to continue to move forward and prosper as the overall industry rebounds. But again, Tim and Carol, we've got AMD coming out with numbers. We'll have Qualcomm next week. We already had TI, which was a little disappointing. And then we'll get NVIDIA, and everyone's going to measure up those reports versus the Intel numbers. And as I said, the street's never patient.
Yeah, no doubt. It's like, what have you done for me yesterday? Having said that, I'm looking at, some of the actually corporate releases from Intel, and they talk about, efficiencies in the fourth quarter, comfortably achieved our commitment to deliver $3 billion in cost savings in 2023. We expect to unlock further efficiencies in 2024 and beyond as we continue as we implement our new internal foundry model, which is designed to drive greater transparency and accountability and higher returns on our owners' capital. Is that still a question in your mind?
What's interesting, Carol, is that I have followed Intel stock for over 30 years. And they had a standard gross margin that was between 60 and 65% for Intel more recently. Now their margins are around 46%. So I think what they're trying to do is they're trying to get their margins back, right, through these efficiencies, trying to basically, cost cut, try to retool. They cut their dividend about a year ago. You guys probably reported that pretty significantly. So they have done things to, change their overall use of capital, trying to use it more towards newer products, foundries, and so forth, getting their margins back. So again, it's going to be a challenge for them to do it, but that's the goals.
Dan, what would you ask Pat Gelsinger tonight?
Again, the street is going to really focus on the timing of these upcoming AI chips, Tim. I mean, really, they are in a different situation because the AI chips that they produce are under a CPU technology. The NVIDIA chips are using GPU, their graphic processors, where they're using computer processing units. So it's a little bit of different way of approaching things. So there's going to be a lot of questions, not only on the new AI PC chips that I mentioned, but also in terms of this roadmap that they have to compete directly against AMD and NVIDIA, and the timing of Falcon Shores and Habana Giande, if I'm pronouncing that correct, number 3.
Right.
So it'll be, again, guys, every conference call, there's a million questions on AI. We're going to get it next week with Alphabet and Meta and all those guys too.
Hey, real quickly, 30 seconds. ASML hitting record as orders for its high-end chip machines soar. You've got the Intel news today. KLA Core coming out too. They're down about 6% in the aftermarket, following their earnings. It's not just the same for everyone. Is there some story that you're getting from the semi industry about the overall economy? And just forgive me, 20 seconds for you.
Yeah, Carol, I mean, TI, as you know, reported numbers that didn't meet expectations. They're mostly auto and industrial.
Yeah.
You mentioned ASML in the equipment space. They gave kind of subdued forecast, but I expect them to beat that.
Yeah.
So I guess there's just a lot of moving things happening right now in chips. It's very exciting. We're getting a lot of different contradictory information.
A lot of cross currents. Dan Morgan, but you make sense of it all. Senior Portfolio Manager at Synovus on Zoom in Atlanta. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. The big story after hours. Earnings out from Intel. The stock now down by roughly 6%. Intel is the largest maker of computer processors. It delivered a disappointing forecast for the current period, signaling that it does continue to struggle to defend its once dominant position in data center chips. Dan Morgan is with Synovus Trust, and he was a guest moments ago right here on Bloomberg Business Week.
Guidance going into the first quarter is disappointing. Even if you look at the midpoint of that range that they gave in revenues, that came at $12.7 billion. Street was at $14.2 billion, and then that EPS number was a big miss.
And you can hear more of the conversation on the Bloomberg Business Week podcast. Download it wherever you get your podcasts. Again, Intel after hours, shares selling off. Intel now down by 6.9%. It was an up day on Wall Street. We had a late day rally. The Dow, the S&P, and NASDAQ all advancing. 25-point run up for the S&P, now at 48.94.38 was a gain of 0.5%. The Dow up 242, closing above 38,000. 38,049 on the Dow, up 0.6%. NASDAQ Composite Index up 28, up 0.2%. NASDAQ 100 Index up 17, gain of 0.1%. 10-year yield 4.12% with a 2-year yielding 4.30%. Gold up $6 the ounce to $20.19. That was a gain for gold of 0.3%. And West Texas Intermediate crude oil today, WTI advancing by 2.8%, 77.17 a barrel. So again, recapping, turned out to be an up day for the Dow, the S&P, NASDAQ 10-year yield 4.12%. Checking Intel one more time, selling off after hours after that report. Intel down now by 6.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm always hungry.
This is like your theme song.
Okay, so full disclosure, Carol just gives me the hardest time because I'm literally always eating.
Always eating. I look over, and this guy is like as thin as could be.
Well, I'm always looking for any excuse to make food part of our program, part of our show.
I know. Just like I'm always looking for wine to make part of our show.
Yeah.
You're always looking.
Hey, it's yin and yang. It works, okay? To that end, we got Norma Chu with us. She's a financier turned culinary entrepreneur, formerly the head of HSBC Private Bank, who decided after a few years of banking to make her pivot and start Day Day Cook. It's now a publicly traded company with her at the helm. She joins us here in the Bloomberg Interactive Brokers studio. Norma, welcome.
Thank you for having me, Tim. It's really glad to be here.
Well, you've got a really interesting story. So before we get into, talking more about what exactly you're doing day to day, just give us the big picture and how you ended up leaving banking to become an entrepreneur.
Wow, and that takes me back 13 years ago when I first started the company. Growing up, I've always had two passions, which is the stock market and cooking. I grew up watching the Bloomberg, CNBC, and so after graduating from UW, I grew up in Seattle. I was in investment banking for a couple of years and then got into equity research. But moving back to Hong Kong, I then realized a lot of my friends didn't really cook. And for me, growing up in the U.S., I really enjoy cooking. Cooking has always been a big part of me connecting with my family and friends. So I wanted to create something that promote cooking for future generation. And so I started Day Day Cook. And in the beginning of the business, we really focused on creating short form video content, promoting very easy to follow home cooking recipes. And over the years, we kind of following that mission to promote Asian cooking culture to the world. We started as media and then later on doing media content commerce. And a few years back, I decided to launch private label branded products. That's kind of the evolution of the business to date.
There's so much competition out there, and there was a period where I felt like there were all these different types of food services that, would teach you how, provide the products and so on and so forth. How do you kind of find your niche in that space so that you could find a sustainable business? I mean, you've been doing it since 2012. Mm-hmm. So what has been your approach to kind of keep the business going, keep it sustainable?
I think it's really just, being open-minded and being aware in terms of what's happening out there, what's happening in the industry and with our consumers, and having a very positive mindset. Competition, I think, is everywhere, and as long as it's an industry that is attractive, there's going to be competition. But we see it as a positive light. The more people that come into the space, we're going to grow this space together, and really look at it from a collaborative manner, and seeing this opportunity and really acting on it. So, for example, even though we started Day Cook in Hong Kong, then into mainland China, back in 2022, I decided to start venturing and looking into other opportunities elsewhere. And really coming back to the U.S. that year, I really realized, wow, there's a huge demand for consumer looking for convenience meal solutions with a focus in Asian cuisine. So I thought, okay, that's a great opportunity. How can we take advantage of it? And so I started talking to people in the industry, and later on really meeting some very interesting founder in the space. So I got to know Nona Lim, which ended up a few months later became our very first acquisition here in the U.S. market. And now, a month ago, we also completed our second acquisition here in the U.S. So I think that's just an example of being open-minded and aware of what's happening, seizing opportunity with a very positive attitude.
So where are you doing production here in the U.S. in terms of actually creating the meals, getting them out to and they're available.
The co-packers, right?
Yeah, they're available in grocery stores around the country. But where are you doing the manufacturing?
So all of the products are mainly made in the U.S. right now, and then we have some international co-packing partners. So under the Nona Lim products, we have some products coming in from Singapore, and recently we also helped on the R&D and product innovation side of things, and we launched some new clean label cup noodle products coming from mainland China. But for now, most of the products are really made in the U.S.
How profitable is it? In other words, what is it? I don't know. What can you tell us and share? We're Bloomberg. We're so into it. You said it kind of grew up or watched certainly Bloomberg and some of our competitors. But how profitable is this business? Are you profitable?
Yeah. So we announced our third quarter 2023 numbers last Friday. So we have been EBITDA positive for 2 quarters now. The markets shift, and investor also the focus also shifts sometimes. And for what we see in terms of trends, in terms of managing fast-growing food companies, growing profitably has become really important. I think maybe a couple years, maybe 3 to 5 years ago, growing at all costs was kind of the trend.
Correct.
But in the past 2-3 years, most of the founders that we talked to, including ourselves, including myself, the focus has really shifted to creating products that have healthy margins and finding distribution partner and channels that's sustainable.
Right.
That's really the key here, and that's what we're doing, and that's who we're looking to continue to partner with.
It's so interesting that you ended up IPOing back in November of 2023, so you've only been a public company for a few months at this point, but it's so interesting that you took the public company route, because in the space that you're in, oftentimes what happens is a huge CPG company would come in and buy you, and we see that with Siggy's yogurt, for example, or Justin's peanut butter, for example. Why was the IPO the right route rather than getting gobbled up by a bigger company?
So I truly believe, even though I've been doing this for 13 years, this is just the beginning of how I want to build and grow this company. A couple years ago, I decided to start this go public journey, and it's been a very rewarding path so far. And the thought process really is about finding the right platform, taking the company to the next stage to allow us to grow through acquisition and buying more brands. And instead of being bought out, my view is what we're creating here, I want to build a cross-generation company. I want to become, for example, the General Mills for Asian cooking, if you will.
Wow.
So you're going to stay in that vertical,
yes,
right?
That's right. We want to be very focused, continue to attract more quality brands in the consumer and the convenient meal solution space with a focus on Asian cooking.
Direct to consumer, do you do any, or is it all you're going to find it in stores?
Right now, most of our brands are available in stores. We do a fair amount, a smaller portion in direct to consumer. Current limitation is really at the product format. So, for example, Nona Lim is mainly, traditional retailers because the product format is chill and frozen.
Got it.
But now that we've launched shelf stable, it's a lot more flexible.
What's the top line growth?
Top line growth, we are, it's very attractive, and we're really exciting about all these
Doubling
opportunities.
the business in the last year? Like, what can you tell us in terms of that?
Some of the brands that I'll give you, maybe I'll answer the question this way. Right now, we're still, in the high growth state, and then we are looking for a lot of partners to join the platform now that we were newly listed. And some of the growth criteria that we look at least minimum, around 20% growth. Of course, that varies, right? If we talk to the smaller brands, they're starting out, still have a lot of upside. The growth we could be looking at 40, 50%. But if we're talking to a potentially bigger, more influential and established partner, then 20% really makes sense.
You're based in China, but you're traded on the New York Stock Exchange. Is there any chance that you would move the company headquarters back here to the U.S.?
I think, we are having an open-minded discussion right now amongst the management team. So it's possible that, we relocate the business and the headquarters elsewhere, depending on the shift in the revenue mix in the next, 2-3 years.
So it would depend on the revenue mix of geographic revenue mix?
That's right.
You are in New York. Benchmark just today initiated coverage at a buy with an $8 price target. We did mention the stock, right? It popped today.
6% today.
6%. 30 seconds left here. What is it that the analyst community most kind of press you on?
I think, for me, it's just really focusing on executing on our growth strategy. We're newly listed. It's time for me to stay focused on the business and deliver on what we say we're going to do, which is growing internationally and expanding our multi-brand product portfolio.
What's your biggest market right now?
Biggest market is still the mainland China market.
Mainland China. What do you think will be in maybe a couple of years your biggest market? Still mainland China?
The highest growth right now is in the U.S., and I would put my bet in the U.S. market.
All right, really interesting stuff. So stay in touch. We'd love to hear more as you continue to move on this journey. Norma
Thank you so
with
much.
Us. Yeah, founder of Day Cook, joining us here in our Bloomberg Interactive Broker studio.
Hey, from New York City to Washington, D.C., let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Emergency Ukraine and migration deal today in the face of increased pressure to stop the bill that's coming from presumptive GOP presidential nominee Donald Trump. Senator Mitt Romney is among those frustrated.
The fact that he would communicate to Republican senators and congresspeople that he doesn't want us to solve the border problem because he wants to blame Biden for it is really appalling.
Romney speaking with reporters today on Capitol Hill. Senate Minority Leader Mitch McConnell says talks on border policy are still underway, and he dismissed Trump's opposition as nothing new. Former President Trump took the witness stand in a New York courtroom this afternoon for his defamation damages trial brought by writer E. Jean Carroll. He only answered a couple of questions and denied the allegations. Trump has already been found liable for sexually abusing and defaming Carroll. This trial is solely to determine how much money she receives, if any. Carroll is seeking $10 million. A former Trump White House official is being sentenced to 4 months in prison for criminal contempt of Congress. Federal prosecutors said Peter Navarro thumbed his nose at the House January 6th investigation committee and refused to comply with a subpoena to testify. Federal prosecutors sought 6 months for Navarro. Alabama today plans to execute a convicted killer with nitrogen gas in the next 90 minutes. It's the first time this method has been used in the U.S. Pastor Jeff Hood is the spiritual advisor to death row inmate Kenneth Smith.
This is a human experiment. We just don't know. I think that there are a number of ways that this could go horribly, and we could be stepping into a house of horrors that leads to all sorts of just unbelievable consequences.
Hood says Smith is terrified. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We're keeping an eye on Intel shares after hours. The largest maker of computer processors tumbled in late trading after delivering a disappointing forecast for the current period, signaling that it continues to struggle to defend its once dominant position in data center chips. After hours, we now have shares of Intel trading lower, down by about 7.8%. Also out with earnings after the close of trading, Visa had posted a profit that beat Wall Street predictions as credit card spending climbed amid strong U.S. economic growth. After hours, however, we do have Visa selling off, down now by 3%. Another update on Wall Street, another record for the S&P 500 index. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index all finished in the green today. S&P up 25, up by about 0.5%. The Dow up 242, up 0.6%. The NASDAQ Composite Index up 28, higher by 0.2%. 10-year yield 4.11%, 2-year at 4.29%. Gold up $5.50 the ounce to 2019, up 0.3%. West Texas Intermediate crude up 2.6%, 77.07 a barrel. As for the overall market backdrop, Greg Halter is Director of Research at Carnegie Investment Council, and he was a guest right here on Bloomberg Business Week.
We have an election year. We have the potential for the Fed to cut rates. Our belief is in long-term investing, and our general long-term belief is the market goes up, not every year, but goes up over time, 8 to 10%. We do think 2024 is going to be a decent year for the market, certainly not as strong as 2023, but we think it'll be up.
And again, you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Again, Intel lower after earnings. We do have Intel trading lower now by 7.5%. Visa after earnings down by 3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. Well, this is a story you and I feel like we talk about this a lot.
Yeah, fair to say it's kind of been top of mind. That is what's in our drinking water. For me, at least, I don't know what spurred you to think about this. It was a Bloomberg News article that came out a couple of weeks ago. It noted that researchers have found that bottled water contains previously undetected nanoplastics. Here's why we're concerned, Carol. Nanoplastic pose a greater threat to human health than microplastics because they're small enough to penetrate human cells, enter the bloodstream, and impact organs. Nanoplastics can also pass through the placenta to the bodies of unborn babies.
Yeah, it kind of freaked us out, to be quite honest. So we wanted to bring on a guest to talk to us about contaminants in drinking water overall, whether it's nanoplastics, lead, and more, which we know lead has continued to be a problem in some areas of the United States. Very pleased to welcome Natalie Exum. She is Assistant Scientist in the Department of Environmental Health at the Johns Hopkins Bloomberg School of Public Health. Of course, the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. She joins us on Zoom from Baltimore. We're so delighted to have you here with us. So a lot to talk about. How worried do we need to really be, whether we're drinking water off a fountain at work or in an airport or water coming into our home? Give us kind of the big macro picture, if you would.
I'm delighted to be here, and thanks for letting me talk about something that I love so much. So drinking water from a fountain or drinking water from a tap in the United States is remarkably safe. We have excellent environmental legislation under the Safe Drinking Water Act to ensure that many, many contaminants of concern that can get us sick and send us to the bathroom and vomiting and other contaminants of concern are not in our drinking water. The things that do concern me, both as a scientist and as a mother, are for the contaminants you mentioned, specifically lead or some of these emerging contaminants of concern that we as society have developed chemicals so quickly that we don't even, we know what they do to make our, say, consumer products more effective, but we don't know what they're doing once we get exposed to them kind of consistently and chronically throughout our lives. So I would say that, turn on your tap, in your home when you go home and rest assured that it is remarkably safe. But I think we also need to get smart about how we do drink our drinking water. And if you're concerned about lead, flushing our pipes in the morning is probably a good idea, because water that's been sitting in a pipe that may contain lead in it overnight may have higher amounts of lead in it than if you were to flush it. So we need to get smart about our drinking water.
Okay, so let's
know
talk
what the hazards are.
Let's talk a little bit about lead, and then I want to get to some of these newer chemicals. The EPA has proposed a rule that all lead service line pipes in the U.S. be replaced within the next 10 years. I got to tell you, I didn't know about this rule until today when I was doing research for this interview. But I'm so shocked that lead pipes still exist, because here in New York, they were banned more than 60 years ago. Where is this an issue right now?
Well, I mean, you did. That's great research. There are 9 million lead service lines. That's what the EPA estimates still in the United States. The thing about these lines is that they were mostly laid in the 1920s. And if you were living, especially in an older city, say New York or Baltimore or Detroit, where they were booming, those cities were really expanding in the early 1900s with industry. Well, lead lines were so easy to use, because if you had a stump or a rock, or you needed to kind of make a connection, it's really nice to bend lead lines and make them easy to use when you're building out houses really quick. So I would say, even though they were banned in the 60s, we have, the average pipe age in Baltimore is 75 years old. So we really do have a lot underground that we don't see that can be a concern.
So, you said flush the line. How long do you flush the line in the morning? Because sometimes I am torn between being an environmentalist, and I've had people on here about water conservation.
This isn't California, Carol. You can flush the line. Okay?
I've had family members from California who are like, stop running the water.
No, you're not supposed to take showers in California.
So help me out. So Natalie, help me out here. So I do sometimes run my shower initially, because I do live in a city just a stone's throw from Lower Manhattan, and I know there are old pipes still in the system. I've replaced all my plumbing, but once we get out of my house, I'm still nervous about some of the stuff that's coming in. How long do you flush the pipe in the morning?
Yeah, so if what we're worried about is lead consumption or drinking water, I would say flushing your kitchen sink is good to do before you fill up your coffee maker. Flush that line so that the water that's coming in is that kind of fresh water from the main line. And so
is it just color? Is it just coloration that you're looking for?
It's not color at all.
So
honestly,
how long do you flush?
I as a public health practitioner, it's hard for me to prescribe it for everyone. It will vary.
Yeah.
But I would say, actually it's nice in the wintertime. You can put your finger under the water, and the water that's been sitting overnight would actually be warmer because your house is warmer. So when you feel that temperature change to being really cold, it's coming in fresh.
I like that. I like that really cold water anyway, I got to be honest.
So you wait for it to
I always wait for it. Okay, we only have a couple minutes left, so I want to talk about PFAS and other chemicals.
So
important. You said there are chemicals that we use in our consumer products that are now getting into our water system. What do we need to know about this, and how do we protect ourselves at home from nanoplastics, microplastics, and PFAS?
Yeah, two very different problems here. And I only have 2 minutes. The nanoplastic problem is one that is really everywhere. There are plastics in everything, and so I'm going to leave that one aside. For PFAS right now, these forever chemicals that are extremely that bioaccumulate, they're extremely hard to break down in the environment. Those are of active concern right now for drinking water utilities, because the Environmental Protection Agency is putting together some very, very low limits, these maximum contaminant limits that are going to be extremely protective for public health. And so I would say, because they're on the radar so much, there is going to be this kind of treatment level protection for the population very soon. That doesn't mean that you still have to think about how you might want to use point of use protection and granulated activated carbon. That is also helps reduce lead. So these point of use devices, I think, are going to be really important for us to think through in the future and today to get rid of these forever chemicals. Microplastics. It's going to be a longer answer for you.
You can come back. You can come back. Before you go, though, we have 20 seconds. We have 10 seconds. A couple water filters that you can recommend.
Yeah, I say look for the NSF/ANSI-53, and that's a good one for your lead reduction.
So helpful.
We got to get the doctor back.
Natalie, thank you so much. She's assistant scientist in the Department of Environmental Health at the Johns Hopkins Bloomberg School of Public Health. Thank you.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Intel now down by 8% after hours. The largest maker of computer processors is tumbling after delivering a disappointing forecast for the current period, signaling that it continues to struggle to defend its once dominant position in data center chips. Again, after hours, we got Intel now lower by 8%. Microsoft going to be laying off 1,900 people across its video game divisions at Activision Blizzard. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, this is all about that acquisition and what's happening now. Microsoft bought Activision Blizzard for $69 billion. That deal closed late last year. Now, in an email to staff reviewed by Bloomberg, Microsoft gaming chief Phil Spencer writing the cuts represent about 8% of Microsoft's 22,000 gaming workers. Meantime, Activision's publishing chief writing that the cuts are made to reset and realign resources for the future. Other video game companies, including Riot Games, have also enacted mass layoffs. Charlie.
And that's Denise Pellegrini reporting Microsoft shares continue to push higher, up another 0.6% today. Tesla down 12.1%. The stock plunged after Elon Musk's pitch for investors to look past slower sales growth fell flat. Not just Tesla today, but other EV makers, including Lucid and Rivian, also moved lower. Tesla narrowly missed earnings estimates and warned its rate of expansion will be, quote, notably lower this year. Again, Tesla was down 12.1% today. Among the other EV makers, the pure play EV makers, Lucid lowered today by 5.7%. Rivian Automotive today lower by 2.2%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenevec and Carol Messer live from the Bloomberg Interactive Brokers studio in New York. Let's go to Washington, D.C. for a check of the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Hey, Tim. Former President Trump testified today in the E. Jean Carroll defamation trial. He spent only 5 minutes on the stand after the judge placed strict limits on what he could discuss. Trump did say he considers Carroll's accusations against him to be false, but he has already been found liable for sexual assault and defamation of Carroll. This trial is all about the damages that should be rewarded to Carroll, if any. Lawyers for Donald Trump say the district attorney in the Georgia election interference prosecution should be removed, claiming Fani Willis inappropriately injected race into the case and stoked racial animus in response to allegations of misconduct against her. Opening statements began today in the Michigan trial of Jennifer Crumbley, the mother of the teenage boy who killed 4 people at Oxford High School in 2021. Prosecutors accused Crumbley and her husband of buying the gun for their son that was used the day of the shooting and not getting him necessary help as his mental health deteriorated. This is Assistant Prosecutor Mark Keast.
They didn't do any number of tragically small and easy things that would have prevented all of this from happening.
Keast believes Jennifer Crumbley showed willful negligence by allowing her son to have a gun despite exhibiting worrying behaviors. Her attorney says Crumbley did the best she could and had no way of knowing what would happen. Alabama is scheduled to carry out the nation's first execution by nitrogen hypoxia in just hours from now. Kenneth Smith was sentenced to death for a 1988 murder. He has already survived a botched execution attempt by lethal injection. That was in 2022. Smith's attorney wants the execution blocked, arguing the untested method may violate the Constitution's ban on cruel and unusual punishment. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
Thanks so much for that update, Nancy Lyons. Tim Stenevec and Carol Messer live from the Bloomberg Interactive Brokers studio. Carol, a bit of a surprise when we were going through earnings this afternoon.
It surprised me. I was kind of focusing on Intel, and the guys are like, on the TV side talking about it. I'm like, oh, okay, people are moving around. But
I'm going to say something, okay?
Yes.
You handled it like a pro.
Thank you.
Are you a pro?
No.
You're a pro, okay? Enough about us, though. Let's talk about JP Morgan because the company CEO, Jamie Dimon, moved a handful of his top lieutenants into new senior roles, positioning them for more experience running the firm's operations as he prepares potential successors.
That's interesting. So Jen Piepzak, right, and Troy Rohrbaugh, they have now been atop an expanded commercial and investment bank. This is according to a statement that was put out today. So they are putting them atop the commercial and investment bank. I guess they're broadening it out a little bit. This is halfway through Jamie Dimon's 5-year retention package. So we're 2.5 years in, 2.5 years to go. Will we get another 5-year, or is he ready to kind of pass the baton?
Okay, so if you're saying to yourself, Jen Piepzak's name sounds kind of familiar, you'll remember back to 2021 when she was elevated to co-lead the Consumer Community Bank alongside Marianne Lake. For her part, Marianne Lake will get sole control of the segment, overseeing more of its business lines. Carol, 5 more years for Jamie Dimon? What do you think? He's been there since 2005 as CEO.
Exactly, right? It's a job. He is the long-standing big bank CEO on Wall Street, meaning he's the only one left that was there during the great financial crisis of 07, 08. And so he has become certainly an individual and a bank that we look to in terms of how are things going, right?
Can I tell you something?
You can tell me anything.
You go to the most read on the Bloomberg terminal,
and
you look at the most read stories in the last 1 hour. JP Morgan is the most read, shakes up top ranks, spotlighting 3 executives. It's the most read in the last hour. above Microsoft killing survival game, Intel giving a bleak forecast. People want to know about these people
Intel's
moves.
down 9%, but this is what's going on.
This is what's going on.
Shares of JP Morgan, folks, in the aftermarket, just up a hair, really little move, but it's obviously something that will continue to shape the narrative tomorrow, just like Intel will. KLA, I think, also seeing some selling in the aftermarket. All right, that's going to do it for Tim and me. Thursday's over. We're headed towards Friday. Don't go anywhere. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Mitch McConnell says talks on the border continue despite pressure from former President Trump against a bill. The fate of aid for Ukraine potentially hanging in the balance.
We'll hear what Texas Governor Greg Abbott has to say on immigration, and Kyle Kondik of Sabado's Crystal Ball will tell us how it's factoring into this election cycle.
Plus, fourth quarter GDP soaring past all expectations and another positive sign for the Biden administration. We'll hear from senior advisor to the president,